Hello, investors. Welcome to the channel where we look for possible swing trades using technical analysis. Before we begin, all I ask is that you hit the like button and subscribe. It really helps out the channel. With that, let's get right into today's video. We are looking at Air Products and Chemicals, ticker symbol APD. This is a dividend aristocrat that recently had a very poor earnings call. It dropped the share price significantly and I believe offered quite a buying opportunity. The business, in case you're unfamiliar, is basically they produce chemicals for other companies to use in manufacturing and a vast array of other industries. So this is a sort of behind the scenes company that just quietly makes money. And here we are on Air Products and Chemicals annual chart. You'll see the share price is well below all the major moving averages, and there is a huge gap down after earnings. And if we look down at the RSI, you'll see it is in the oversold zone and appears to be rising, although that's inconclusive at the moment. Both stochastics are in the oversold zone and they look to have bottomed out. But as you can see from this heavy bouncing action here, that's certainly no guarantee. The volume chart shows, as you might expect, a massive red candle following earnings. And now we have decreasing candlesticks showing the reduced volume as the volume of trading comes down. But there are some green candles in there. Just remember that a red and a green candle, they don't indicate full buying, full selling. We only see the majority of buying and selling. So what I suspect happened here is during the initial sell-off the following day, people took that as a buying opportunity and came in and purchased shares. And then the sell-off continued. And then more people came in and purchased shares. And then the sell-off continued. And we'll see how things go on Monday. But in any case, we look at the MACD and it does look to have formed a bottom and is heading higher. But again, we shall see. One other thing I like to look at is the Bollinger Bands. If I put the Bollinger Bands here, you can see the share price absolutely jumped way outside the Bollinger Bands. So this is another indicator that most of the time it will pull back into the Bollinger Bands range. And it has done so, although just barely. We're here on the edge. And for full disclosure, after the company's share price fell, I did purchase a few shares, started a position, and I think that if the share price continues at this level, I will likely purchase a few more. I'm going to remove the Bollinger Band so we can zoom out just a bit here. I'd like to back the chart up to the 5-year chart. And you can see if you look, although it's over a longer time frame, the share price has found support at approximately this level several times in the past. Now, granted, that's over 2-3 years ago, so I wouldn't call this a huge indicator, but it does factor in, I think, that every time over the last few years that the share price has dropped down to the 215 to 225 range, right where it is now, it has found support and gone back up. And if we switch over here to the fundamentals, just for a brief overview, you'll see this is quite a good company. Institutional ownership is high. Institutions like Air Products and Chemicals, over 80%. Short interest here is very low at barely over 1%. The debt to equity ratio is slightly higher than the industry average, higher than 64% of others in the industry. But if you look at these numbers, these are not concerning numbers. There's nothing that I see that makes me say that this company is carrying a huge amount of debt. And as you can imagine, when you're manufacturing chemicals, you need lots of land and equipment. So the fact that it has debt is not all that concerning. We look over to the PE ratio, it is high relative to the industry. Now, this is certainly not high in relation to, say, a tech company or software company, but for the industry, we have a PE over 20 that is higher than 70% of others in the industry. So what that tells me is this company typically commands a premium value. the fact that you can get it now at a reduced value, reduced cost is likely a good opportunity. When we look over here at the margins, these are excellent margins. The gross margin just over 30%. That beats out 70% of other companies in the industry. Operating margin above 20% beats out 91% of other chemical companies. And this net profit margin of 19% is excellent as well. When we look down here at the return on equity, again, well above average return on equity of 16%, and that beats out 69% of others in the industry. Growth rate is average for the chemicals industry. One thing I'll point out here when we look at the dividend yield here is listed as 2.74%, but I noted that has not been recalculated based on the current share price. This is based on the past share price and dividend payments. So when this gets recalculated, it will be somewhere around 3.1, 3.2%, or perhaps slightly higher, depending on which calculation method they use. A payout ratio of 66%. Yeah, it's a tad higher than I'd like to see, but it's still not so high that I would be concerned with it being reduced. So overall, Air Products and Chemicals is a long-standing, excellent company. This company was founded in 1940. I think this does present an excellent opportunity to buy in if you were looking for a slow, steady growth company. But please let me know what you think of Air Products and Chemicals in the comments below. And if you enjoy having ideas like this sent directly to you, please hit the bell notification to be alerted when new videos post. Remember, I'm not offering financial advice. I'm not a financial advisor. These videos are for entertainment, discussion, and education. And if you'd like me to analyze a specific company using these metrics, please let me know in the comments and I'll get to it as soon as I can. That's all for today. Thanks for watching and good luck with all your investments.